trade in focus, as every day, after the United States and Japan reached a trade deal this week, and then talks with China are scheduled for early next week. Joining us right now is Michelle Caruso-Cabrera, MCC Global Enterprise CEO, also a CNBC contributor. She's with us live here at the NASDAQ. And Michelle, it's great to see you.
Good to see you this morning, too.
Okay, so people looked at this Japan deal and thought, wow, this is a template. Stocks in Japan took off. Stocks in Europe took off because they thought, okay, this says kind of here's the template for what we could get and maybe 15% tariffs on autos. That's a big deal. You saw the automakers in Germany take off. Where do things stand right now in this whole global trade mess at this point?
Well, I think when it comes to the markets, what they see happening, there's Japan, there's Indonesia, there's a lot of other announcements that have happened, right?
This week.
Where they can say, okay, we're getting to the end of the uncertainty. Tariffs will be higher, not great, but not catastrophic.
Yeah, not the levels that we heard.
That we had heard, exactly. Right. So the worst of that is over. And now we kind of understand this is what the kind of deal the president wants, right? You get a certain level of tariffs. There's some kind of deal where the other country either buys a lot of U.S. products or invests in the U.S. or both. That's a big win for the president, and he moves on. And you're starting to build this pattern, right? So I think that's what's good for the markets. Now we wait to see, okay, what are the impacts of the deals, right? I mean, we just saw Dow Chemical warn that the tariffs are a problem. We've heard GM say the tariffs are a problem. So now we get to the next phase of what's happening. And it also kind of gives us a template as we see Scott Bessent go to the Treasury Secretary, go to Stockholm on Monday to start meeting with his Chinese counterparts about trade again.
What are the expectations with our trade with China? And what about the EU's meetings that just took place with China?
Yeah, so the expectations are that there's an extension of the deadline that had been, artificially imposed for August between the Chinese and the U.S. There's going to be a continuation of détente. That's the expectation. Scott Bessent's basically said that out loud. We've gotten signaling out of the Chinese as well. What was very interesting in the last 24 hours is the EU went to China for a big summit in Beijing. It was Ursula von der Leyen, Xi Jinping. And when President Trump first got elected, both the EU and China kind of turned towards each other, and there was this notion that maybe they could help each other out, right? But that clearly to the EU became clear to them that was a Faustian bargain because the Chinese have so much overcapacity when it comes to things like EVs. Ursula von der Leyen said very clearly yesterday in China, your overcapacity is threatening the industrialization of China. We have to do something about
Europe,
that.
Yeah.
Of Europe. And we've got to do something about that. The meeting was described as tense. So that has not worked out. And also, with détente between China and the U.S. occurring, China doesn't have as much, of a need to strike a deal with the EU.
That would put them at a disadvantage with some of these things. But, I mean, this overcapacity, this over-manufacturing, that's been a problem that we've recognized for a long time. Even Janet Yellen, when she was Treasury Secretary, would make comments about this. She gave a speech to the Economic Club in New York talking about what a problem this was. Do you see a way that the U.S., Europe, and others kind of team up at least on that front to say we're not going to continue to take your overcapacity, your overbuild?
So certainly that would be the incentives for everybody to get together should be there. Yes, it's been a very long problem. Wilbur Ross warned about it when it comes to steel during the first Trump administration.
It's been over a decade in the making. And this is part of their plan that they've laid out.
Right. What's different for the EU now is they didn't have as large a trade deficit with China before the pandemic, but it has now ballooned dramatically. And so now they're in the same position that we are. And so they
Welcome to the party.
Welcome to the party, exactly. And what's happened to them, which is very interesting and doesn't often get discussed when we talk about the imposition of tariffs, is they imposed very high tariffs on Chinese EVs, some of them as high as 45%. Right? This is above and beyond the 10% they put on all tariffs. It's still, you could get an EV in Europe for only 20,000 euros.
With a 45% tariff.
Because the Chinese have let the currency weaken against the euro. And so when that happens, the inflationary impact of the tariff goes away. So when everybody says, oh, tariffs are inflationary, not necessarily. It depends on what happens with the currency. And we see that happening. And by the way,
yeah, you see that with the dollar.
Well, so the dollar got weaker against all of the currencies in the world, except against the Chinese yuan. It's been flat, which means by definition, the Chinese have kept it weak, right? Because
intentionally to deal with any tariffs.
Exactly.
Wow.
You see what I?
Yeah,
to soften that and to make sure their exports aren't as impacted.
So they can afford higher tariffs if we put them on them.
Well, I mean, I don't
short run,
not 145% perhaps, but
right.
you know, there's a lot of wiggle room with the currency. Stephen Mirren put out a report before he got his job in the current administration, highlighting that in Trump 1, when they imposed tariffs, a lot of it was just absorbed with the currency.
It was, yeah.
So,
and we always say it was absorbed by the manufacturers, but it really was this larger play.
Look, everybody ends up paying in some way, right? But when you hear the administration says the other country pays, a lot of time what they're talking about is the fact that their currency weakens. What's so interesting is we haven't had a lot of inflation yet, even though the dollar got weaker, which was contrary to expectations. So,
all right, let's talk a little bit about Venezuela and this decision that came back through. It's been a really good week for Chevron. A week ago, they won in this arbitration, or that was taking place between Chevron and ExxonMobil over the Hess deal. It cleared the way for the Hess deal to go forward. Now they've gotten some good news from the Trump administration, too.
Yes, so there are reports, multiple reports now. The Wall Street Journal had the exclusive that they are now, the administration is going to allow Chevron to go back in and start drilling again. They had a limited license. A few months ago, the government stopped it. Now they're going to go again. Someone familiar with those discussions tell me Trump was very interested in doing this, one, because he wants wiggle room when it comes to Iran. If you can get 1 million more barrels coming out of Venezuela, it softens the blow on the oil markets if Iran comes offline.
Because he does not want to see oil prices go up.
Exactly. Yeah. And it's also a cudgel to the Iranians, like, we don't need you,
right?
Because we can get more out of Venezuela. It also provides, Maduro's not going to be there forever, the current dictator. At some point, the opposition, which has been on a roadshow, an investor roadshow, which I attended one of them recently, they would like some kind of revenue that they could have eventually if they come to power, if and when that ever happens. So this would be one of those deals that helps them out. He can do this deal now because the big, beautiful bill has passed. And he doesn't need the hard-right Cuban legislators vote anymore.
That was not something I had heard or had realized before, that it was Republicans in the House who are Cuban hardliners who didn't want to see any deals done.
They don't want any engagement.
Run Venezuela.
They don't want any engagement with the Maduro regime at all. And Marco Rubio didn't want it either. But Marco Rubio, works for the president. The president decides, and so that's the way it is. But that lever that they had of power has now disappeared.